Hello, today is the 20th of January 2012, and it is a Friday. Welcome to today's silver analysis as the price action has managed to come up to this significant Fibonacci level at 31.68. Really just managed thus far as of 12:50 p.m. Eastern Time or 1650 Central European Time. We're right at this level, and maybe it'll extend further, maybe it won't. We'll go through this within this particular video and go through what to expect. I have moved the Fibonacci levels. These are the lines you were seeing before on the quarter day chart. It's now been switched over, and it represents from this high and this low. So therefore, for this selling to become that of a failed move, what it needs to do is break above 31.68 and then hold above it for more than a week or two, basically, to hold, sort of like you see here within this Fibonacci level, how it broke above it, then it spent a few days finding that area of support, and then it broke through. That's the same sort of action that you would need to see take place. And if we now move this on to the quarter day chart, the high right now is 31.64. And it may be still rallying as it's in a nice bull market as I'm doing this video. But what's interesting is the Fibonacci, which will now be from this low to whatever the high happens to be currently at 31.64. Fibonacci 2, this level here, which would be the first support level, says 29.41. And if it manages to go up 4 more cents to 31.68, it will change to 29.44. The reason is because any single time in which you go to this significant Fibonacci level in here, the 61.8% level, then the 38.2% down move will be from this low to this high will always be 29.44. Well, it'll always be the previous Fibonacci level. So therefore, for the market to really hold up, the first level of support is in this band here, which is roughly between 30 and 30 and a half. But obviously, it really does need to stay above the 29.44 variable. Now, if it breaks this resistance field in here, then what this tells us is there's some sort of forces going on that is unusual, and you might want to give the rally the benefit of the doubt. Now, it can very easily pierce above it and find the resistance point there. That too is also common. But if you start to notice that the market's breaking 32 and up to even 32 and a half, then you really want to expand the time frames out to a more longer term time frame. And we'll do this on the 3-day chart. And its next suggested level of resistance is that of 33.41. So if it continues on going further, that would be the expected level, which was the area of previous support and an area where it consolidated at for the end of 2011. And as far as the whole long-term time is concerned, we have a high of 49.81 from the end of April of last year, and then the low of 26.10 from really two different periods, because there was a 4-cent difference within both of these lows. However, for this selling to be a failed move, it needs to hold and stay above this significant level, and that's a little ways away right now, and that's at 38.91. So I like the number 40, which gives you really a dollar pierce above that level. When it can hold and stay above that for more than 2 or 3 weeks, then that should tell us that things are really starting to get going within this market. So thank you for tuning in, and have yourself a great weekend. Bye-bye.